Hey guys, hope you are all having a fantastic Friday. We finally made it through another week. I'm going to keep this video super short and light on content. I am going to simply talk about a couple of small developments that took place, share some opinions as to what is going on with Citadel, and then recap how we traded today. Today's price action was incredibly weird to watch for sure, and there is a ton of things that did not make any sense. I have no doubt that there was a ton of tumultuous volatility and challenges correcting and manipulating the stocks to the favor of hedge funds. I wanted to buy today, but decided to hold off until the next dip. To anyone who bought, great job. I saw a ton of screenshots of people buying through the day and it was great to see. I only wonder what hedge funds think and feel when they see this type of stuff. I made a pretty important morning video with a couple of wrinkles that I recommend you to watch. Lots of stuff was discussed there in detail. I will link the video in the comments below. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. Let's get started. Prices are climbing at the fastest pace they have been over 30 years. The Federal Reserve's inflation gauge accelerated in August, and it has kept every policymaker uncomfortably watching as supply chain issues and commodity costs continue to grow and threaten to keep prices elevated for much longer than any of them would want. The reason I bring this up again is because today we have officially begun seeing Asian equities follow Wall Street go lower, with bonds rallying today. The fear sentiment is growing and spreading over the continent and slowly creeping up around the entire world. Even Peru say inflation rise by 0.4%. Government officials are arguing back and forth about whether this is really stagflation or now, but the results are the same. An Asia-Pacific head of research at Singapore stated that whether or not this is actually going to be embedded and create problems for years to come is uncertain. It's sufficiently scary that what we are seeing in markets is justified, and I agree with him wholeheartedly. Politicians and publicly elected figures are worrying about the narrative for this problem that they have all helped cause. They seem indicated on justifying what is happening as a mere outcome that was unpreventable, which is a lie. You have buffoons like Jerome Powell saying one thing only to pedal back the next, and then have the audacity to say the Fed will take no blame or accountability for the outcome that they literally produced. Tensions between high inflation and high unemployment is a huge potential conflict that has grown between the central bank's two goals of stable prices and full employment. China has yet provided another worry for investors. The economy has taken a hit from regulatory curbs in the tech and property sectors, and is now grappling with a power shortage that threatens to push the entire globe's energy price through the roof. Gold tends to be inflation's most popular hedge, and on Thursday it edged back 0.3% following Thursday's 1.77 surge, the biggest it has had since March. The whole world is slowly burning and nobody wants to scream fire. Talking about China, Evergrande's woes have reached Sweden, with the company's electric vehicle arm in talks to find new backers after having to cut down 300 jobs. CEO of the Swedish company National Electric Vehicle stated he is acting as if things won't be working out with Evergrande. The situation has triggered the company into giving notice to almost half of its 670 workers in their factory. Their actions were forced, given Evergrande can no longer finance them. It's funny watching how much the economy is in turmoil and then looking at headlines showing that stocks are at a 70-year high. The stock market holdings make up about half of the $109 trillion financial assets that households own. It feels very surreal to watch the world have so many problems while the stock market continues to detach itself from reality day by day. I personally am not worried about it, because the higher the stock market goes, the bigger the fall will be on a market correction or a full-on market crash, which seems to inch closer and closer. Literally, the only people that I see celebrating any of this are banks, who continue to make bullish statements and try to get investors to look into their preferred investment choices. They talk about opportunity and growth while we know that they simultaneously bet against many of the assets that they vocalize. I will continue to add to my meme stocks for the foreseeable future until I get my squeeze, because they are the only safe securities out there in my opinion. Last thing I wanted to share with you comes from the current public opinion favoring a post that explains the reason why Citadel has been on Twitter trying to set the record straight is because a corporate lawyer stated that a hedge fund client's contract can become null and void if the client believes the hedge fund managing their funds will be investigated. This could result in withdrawal requests of their money, and that would result in a ton of money and business opportunities being lost. Given that the new court documents that were publicly disclosed have been making headlines across social media, with the press reporting on it too, if true, This assertion could indeed explain why Citadel has been so vocal recently. If enough clients leave their services, Citadel might experience a bit of a sudden liquidity crisis that might have serious consequences in their ability to keep operating as they have. I previously speculated that Citadel isn't really scared of the DTCC and getting margin called by them, because they could simply borrow money since the rates are so cheap. Instead, who they are mostly scared of are the banks. I have no background in law, but I will continue to look and talk to people with a background on it to see if this is legitimate. It does make sense to me at the moment, especially given that Citadel has been quiet for so long and now they have gone on Twitter making statements for the last couple of days. I don't believe any of what they have said because they have a very tainted track record, and because some of their statements seem to contradict what has been unearthed and corroborated. I shared this so that you guys have a tentative idea of why Citadel has been so unexpectedly making public statements. Let's talk about today. The Fed reported total reverse repo operations at being over $1.385 trillion today, representing a decrease over yesterday's number for submitted reverse repo operations in history. Dark pool trades for AMC accounted for 63% of the total volume today, while GameStop's dark pool trades accounted for 40% of the total volume today. According to Fidelity data, buy order flow for AMC was larger than the sell order flow, with GameStop also enjoying a larger amount of buy order flow than its sell order flow. Let's now talk about performance. AMC traded bullishly today, gaining over 1%. It traded incredibly volatile during the pre-market hours. On two different instances, in a single minute AMC fell from 39.75 down to 38.06. AMC was surging in the pre-market for the most part, an open market opening. It slightly moved up before being dipped all the way down below 37.80. AMC surged back up to 40 before falling again. It then rose back up to 39.80 and retraced to 38.80. It then did its last attempt to break 39.60 but it failed, and retraced to 38.60 where they consolidated for a while. It would eventually close at 38.46, well below the VWAP. As for next week, I will make a video on Sunday going in detail as to where I expect we could be heading into. GameStop traded bullishly, gaining under 1%. It opened to a dip that took it from 179 to 172.50. It would then form an ascending triangle, eventually breaking resistance and running all the way back to 179. However, GameStop failed to break that resistance once again, and instead retraced back to 175.70. It kept holding support above the VWAP until closing at 176.91, slightly above it. As for next week, like I said, I will make a video on Sunday going in detail as to where I expect we could be heading into. That is all I have for you today. Be sure to check out today's morning video, it is very wrinkly and full of DD. Thank you all for the support and love you show every day. If you want to support this channel guys, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. If you saw what YouTube pays this channel you would think I work at a shoe factory for Nike in China. The algorithm hates robots so anything you provide helps tremendously. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy your weekend and to the moon.